For the second Monday in a row, the markets have opened up and almost immediately halted. And it seems like the rest of America is coming to a halt as well, with schools, businesses, restaurants, and bars all temporarily closing their doors. Now, we want to make this very clear that we are shooting this video on Monday morning, and by the time you see this video, the numbers that we're talking about could be drastically different, as we're seeing wild and volatile swings in the market almost to the minute. If you would like up-to-the-minute information, you could always give us a call at 814-580-9881. Now, let's get into what's going on with the market.
Even after we saw an incredible move to the upside on Friday of last week, the four major U.S. indexes were all negative, with the S&P 500 down about 9% for the week, while the Dow Jones was down 10%, the NASDAQ was also down around 9%, while the Russell 2000 was down over 16% just last week. Now, before I get into the returns from foreign and emerging markets, I wanted to take a minute to talk about the historic volatility that we've been seeing out of the U.S. markets. Now, 2 weeks ago in our video, I talked about some of the returns on a daily basis from the S&P 500 that were averaging around 3% a day in moves. But last week, we saw the S&P 500 moving over 7% a day on average, because on Monday, the S&P 500 was down 7.6, Tuesday, up 4.94, last Wednesday, down 4.89, then on Thursday, down 9.51, and ended the week on Friday with the S&P 500 up about 9.2. Now, these averages are around 7%, which is, on average, the return of the S&P 500 on an annual basis, but we've been seeing this on a daily swing. Foreign and emerging market stocks were also negative last week, with foreign stocks down over 14%, while emerging markets were down about 10%. Now, foreign stocks are down over 23% for the year, while emerging markets are down just under 20%. We're looking at two separate charts today, and we're going to start off with a chart of the S&P 500. Now, I just mentioned earlier about all the volatility that we've seen, so I did want to make a mention that we're shooting this video right around 10 o'clock a.m., and that's on Monday morning. So if you're watching this video on Tuesday or Wednesday, then the numbers may be drastically different, as we've been seeing some violent moves out of the S&P 500. Looking at the chart here and at the blue line, this is one of the most important key levels that we've seen in a long time, and that's at the 2400 level. Now, the reason this is so important is because it's the level of the 2017 breakout, if you look at the far left of the chart. It's also the same level from our December 2018 sell-off. And again, that's right where we're sitting today. Now, to put this move into perspective, the high that we've seen on the S&P 500 was around 3,400 in February, and now we're sitting at that 2,400 level, which is approximately a 30% move from the high this year down to where we currently are, and that's happened in less than a month. This next chart that we're looking at is of the New York Stock Exchange, and these are all the companies that are traded on the New York Stock Exchange, not just the S&P 500 companies. So it's more inclusive of large cap, small cap, and mid cap companies that are traded on the stock exchange. Now, you'll notice that this chart looks a little bit different than the S&P 500 did. And if you're looking at the far right of the chart, you'll see that the New York Stock Exchange actually broke down well below those December of 2018 lows by about 10%. So what this means is that small cap and mid cap companies are obviously not holding up as well in this market sell-off as large cap companies such as those in the S&P 500 have been, and people may be holding on to those S&P 500 and large cap companies hoping for a rebound.
First, I wanted to briefly go over the updated coronavirus numbers here in the United States and worldwide. Currently in the US, we have about 3,700 cases and 69 people have passed away. Most of them have been located in the state of Washington. Worldwide, we have 168,000 cases currently. Now, the US is in process of setting up mobile testing sites where you are able to drive up in your car, get swabbed, and then get your test results back. Currently, the testing process is taking about a week to go from a presumptive case of coronavirus to a confirmed case of coronavirus. So we're expecting the case numbers in the United States to spike here in the next week or so. Now let's get into the most important news that moved the markets. On Friday, President Trump held a press conference to start to lay out the federal government's plans for the coronavirus. And while he was talking, the market actually spiked about 10% in the last half hour of trading. Also over the weekend, he held another press conference, which seems to be occurring daily now, and said that the Fed has issued an emergency rate cut, the second one in the past couple weeks, and has dropped interest rates down to 0. Also, as we're shooting this video, the Fed has announced that they're going to provide an additional $500 billion to the liquidity markets for the overnight repo purchases. So it seems like everything is being thrown at the markets right now to try to help stabilize things during this economic downturn. Now, rumors continue to swirl, with the coronavirus being in the news 24/7. It was first being reported that President Trump could have coronavirus, but he has tested negative. Also, we're hearing that we could be looking at a possible 2-week quarantine or curfew here within the United States, and possibly domestic travel bans. It's also being rumored that the federal government is looking at an additional $800 billion worth of financial stimulus, and also looking to possibly push back tax day from April 15th to July 15th. If you want updated information on everything coronavirus and news related, make sure you check out our Facebook page as we'll be updating it regularly.